Hendren, ABC News, Washington.
Still with the economy, the loonie is soaring again. This week, the Canadian dollar broke through the 91-cent U.S. mark. All that has an impact on our economy. So joining us to talk about that is Tom Vassos, an instructor at the Rotman School of Management. Thank you very much for joining us.
Thanks, Scott.
Where exactly did the loonie get such wings?
Well, a couple of factors. If you look at what moves currencies, there's a couple of factors. One is type 1 currency movements, which has to do with domestic factors like the economy and commodities and things like that. And type 2 type factors has to do with external factors like the US dollar, which has really been on a downward trend. In fact, last month, compared to a basket of 6 major currencies, they dropped 6%, which is the biggest drop in the last 23 years or so.
Now, isn't this the worst kind of news for an already battered manufacturing sector?
It is, because they're really the losers as the dollar starts to increase. So manufacturers, exporters. So if we look at it provincially, probably Ontario likely to be a little bit harder hit than other provinces because of the dependence on manufacturing.
Now, do you expect that Ontario could begin pressuring the federal government in terms of trying to bring the loonie down a little bit?
You know, there's not really much the government can do. They can intervene directly in the currency markets and sell Canadian dollars for US dollars, but the market's so big that's likely to have much of an effect. They can do other things like, quantitative easing, where they buy up bonds and things like that, but that requires printing of money, which could lead to inflation. So there's really not much they can do other than maybe make some threats that have speculators concerned that they might do something, and then sometimes that causes speculators to back off a little bit.
Now, not that long ago, we saw parity. Is that where this is going once again?
Yeah, I mean, if you look at some of the projections, the chief currency trader over at TD Securities projecting parity before the end of the year, and the Canadian dollar being further ahead than the US dollar by next year. In fact, CIBC World Markets just released a report last week, and they're suggesting out over the next decade that the Canadian dollar could on average be worth more than the Canadian dollar, so that'll be interesting to see.
Now, what does this mean for Canadian tourists going to Vermont or Vegas?
Well, maybe there'll be some of the winners, people traveling to the south, cross-border shoppers, or investors in Canada that have 100% of their money invested in Canadian stocks and bonds and things in Canada, of course, are benefiting with the double hit with the increase in the Canadian currency as it rises.
Now, if this is being partly driven by the price of oil, if oil gets too high, couldn't that make the recession even longer?
Well, it could. In fact, that's probably one of the biggest reasons why we've seen this big spike. So just in the past month, the price of oil, barrel of oil, increasing by almost 30%. And since the lows in March, it's increased almost 100%. So that has been a big factor in the run-up of the currency. But another big factor is just the big spring run-up in the capital markets that we've seen. So the main stock indices have seen a 35% increase in their values. So the combination of these things is really having an impact on that currency.
All right, from the Rotman School of Management, Tom Vassos, thank you very much for joining us.
Thanks, Scott.